What's going on, y'all? It's Investor Zimp, also known as Zimp Trades, and we are here with everything you need to start Forex in 2025. I'm gonna talk a little bit about the channel, but if you guys want to get straight into the video, go ahead and skip to that 1 minute mark. So, I'm Zimp Trades. This is my first YouTube video. I'm 23 years old. I've been trading since I was 18. I dropped out of college to pursue this. It really is worth it. It really is worth it. If you've been on the fence or you've been thinking about starting, the time is now because this is going to take off, you guys. It is a life-changing skill. I finally reached the point where I feel like I've mastered it and can teach other people. So without further ado, let's get into everything you need to start Forex in 2025. First of all, before you start trading, you need to know what you're doing. What is Forex and how can you make money off of it? Forex is simple. It's foreign exchange. People buying and selling currencies against one another. An example is GBP USD. This is the Great British Pound versus the United States dollar. If I go to the store right now, I live in Maryland, guys. If I go to the store right now in the United States and I get a video game, the video game is going to be $70. If I go to the UK and I get that same video game, it's going to be £55. That's because the pound is worth more than the dollar right now. Why is that the case? Forex. This buying and selling that people are doing against one another, it influences the exchange rate of the pair. If you buy GBP USD at an exchange rate of 1.24 and it goes up, you're going to make money. If you sell it at 1.24 and it goes below that, you can also make money. That's one of the misconceptions people have about this market. They see the charts, they see all the things, and they think it's just like stocks where you can just put something in and ride it up. That's not the case here. You can make money here buying and selling. Catching pips. Pips is what we use to track price movements in the actual exchange rate. 1 pip is equivalent to 1 point movement in the last 2 decimal places of most pairs. For example, GBP before, we were saying 1.24000 as an example. If it goes up 1.24050, that's 5 pips. If it goes up to 1.24150, that's 15 pips. You see, because the last 2 decimal places is what we're looking at. This is a 5 pips, 150, 15 pips. Here is a different example because it actually went down. If it moves from 1.24 down to 1.23500, that's 50 pips in the down direction. The more pips you catch in the direction of your trade, the more money you make. But it's not all sunshine and rainbows. It can also affect you the other way around. The more pips that go in the opposite direction of your trade, the more money you can lose. So keep that in mind. Turning pips into money. Lot sizes. Think of lot sizes as your position size in your trade. How much you are risking in your trade. 0.01 is the starter lot, the micro lot. It's the smallest amount that you can trade. 10 cents per pip. 0.10 is a mini lot. It's $1 per pip. Now, in between, you do have those stepping stones. 0.02, 0.03, and so on and so on. It's the same thing going from a mini lot to a standard. You have 0.2, 0.3, 0.4. But a standard lot is pretty much considered the pro. The pro lot is $10 per pip. Everybody that has large accounts, like anything past $10,000, $20,000, we trading on standard lots. Example, let's use this example again. GBP USD 1.24000. Let's say it goes up to 1.24500 and you bought it, right? You will make 50 pips profit. So how do you turn that 50 pips profit into money? Well, if you got in the trade on a 0.01, you're looking at $5 because 50 pips, 10 cents per pip, $5. You're starting to get it. On a 0.1, $1 per pip, that's $50. On a 1.0, $10 per pip, $500. See, how to actually start trading. Very, very simple. You can start today. You only need two things. First thing is your trading platform. This is where you're going to see live market data. You're going to see the actual exchange rates moving by the second. You will also place your trades here. You can download it on a laptop, a desktop, your phone, your iPad, pretty much anything that you could download an app on. You could download. I recommend MetaTrader 4. I've been using it for all my 5 years, never had an issue. C-Trader, I've also heard from friends that trade. It's a good one, but it's kind of catered a little bit towards people that are primarily using a laptop or a computer. But I haven't used C-Trader, so I'm not going to go too much into it. The second thing you need is your broker account. Now, the reason I put regulated brokers, stay away from unregulated brokers. I've given you guys two good regulated brokers, Forex.com or Oanda. These are probably the two best United States-based brokers I can think of. You don't want to use unregulated brokers. Why? These two brokers right here, all regulated brokers, they have to adhere to the rules of the Trading Commission in the United States. Unregulated brokers do not. What does that mean? Unregulated brokers can take your money and do something shady with it. And once you notice it, because they don't really have to answer to anybody, they can pretty much do whatever they want. Regulated brokers have to answer to the actual commission or they will get chopped. So they can't do anything shady with your money. If you ever have a problem with a regulated broker, you can actually file a claim and start an investigation. But like I said, these two brokers I'm giving you guys right here, they're the best of the best in the market, in the US at least. Never had a problem with either of them. I've used both of them. Super fine. Broker account, you're going to use that as your middleman to the market. You're going to deposit and withdraw your money through your broker. You're going to create an account. To start, you will create an account. Deposit your starting money, whatever you want to use, $50, $100. And then they're going to give you a login for your account. You take that login to your trading platform, log in, and boom, you can trade just like that. Beginner tips. First thing I would tell everybody is find a strategy. You don't want to hop in this market and just start buying and selling willy-nilly while you don't know what you're doing. That's a very easy way to be out a couple $100. I'll tell you that right now. But find a strategy. These two topics, they're kind of long. I'm not going to go too much into them. They really deserve their own video. But find a strategy, guys. I will post mine soon, but these three things right here are types of traders. It depends on the type of person you are. Scalpers, these are short-term traders. These trades only last a couple minutes. If you think, if you kind of that person that you like to see profit and just immediately take it, you're probably a scalper. Day traders are kind of the middle between the two. Your trades can last anywhere from a couple hours to a day to a couple days. I'm a day trader. I like it. It's not too long, not too short for me. It's kind of a nice place in the middle. Swing traders. Excuse me. Swing traders. These people are crazy. No, I'm just playing. Shout out to my swing traders out there. But swing traders, these trades can last anywhere from weeks to even months. Swing traders set their trades and they pretty much forget about it. But this is why I said it's important, because if you're the type of person that you're in a trade for weeks and you're constantly looking like, oh, I'm down today, I'm up today, that's a little bit too stressful on the mind, in my opinion. That's why I say, base it on the type of person you are. Don't just copy what somebody else says. Base it on how you feel. Second thing is very, very important. Probably the most important thing you guys are going to learn. If you put your real money into this market, manage your risk. Manage your risk. Please manage your risk. Only 2 to 3% of your account per trade. What do I mean by that? Let's go back. Your lot sizes. When you hop in, you want to base your lot sizes off your account. There's no reason somebody trading on a $100 account should be risking $10 per pip. They can lose their entire account in one trade. You shouldn't even be trading $1 per pip if you have $100 in your account. My general rule of thumb is I use every 0.01 is $200 in my account. For every $200 in my account, I go up 0.01. So if I have a $2,000 in my account, then I'll start using point ones. If I have $20,000 in my account, that's when I start using 1.0s. 2 to 3% of your account per trade. Please do not break that rule, guys. I'm telling you, you will regret it. But that being said, you guys, that's pretty much the gist of Forex trading and how to start right at this moment. The sooner you start, the better. If you're interested in this, please, 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 I'm telling you guys from personal experience, it is worth it. It is 100 times worth it. But that's going to be this video, you guys. Zimp out.